Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. Hope you're having a great day. We're taking a quick look here at some key meme coins here and potential areas of retracement based on altcoin season index and the fact that Bitcoin's pulling back right now after some positive fundamental news with the, what is it called? The Genius Act and the Clarity Act. So both of those things are supposed to be very positive for the crypto market, but you can see Bitcoin is on its way down here. This is very premature, but just kind of preparing for the worst case scenario because the market is overinflated, specifically altcoins and meme coins right now. So we're going to talk about that. So make sure to stick around so you are well informed on these key levels. And just in general, we're going to start off with some market overviews. I like to touch on this the first of every video, just to give you some perspective on where we're at. Altcoin season index still looking very strong. We'll talk about that in a minute. Crypto ETF net inflow very high here recently, super strong in the sense that we have a lot of money flowing into ETFs. So that's going to positively impact altcoins and meme coins. And when we look at fear and greed index, Bitcoin generally goes sideways and or down when we see the fear and greed index overextended, which we're kind of on the edge of that here. So I'm anticipating once more a pullback to that 115K range for Bitcoin to fill the CME gap and the fair value gap. Those are just once more my thoughts. I've talked about that for a few days now. And at this point, since we can't get above this 119, 120 threshold, and we had some adverse response to the news here today, I think we're in a position where we might see a short-term correction, and we want to be prepared for that, right? So being a trader, it's important to recognize best and worst case scenarios. I'm not just going to tell you what everything's going to go to the metaphorical moon, because that's what everyone else wants to tell you because they're getting views off that. While I like to get views, I'm not going to sell out. I'm going to tell you specifically how things are. And right now, altcoins, meme coins, they're doing fantastic. Okay, there's no other way around it. But a short-term correction makes sense. However, when we look at here at WIF hat, BONK, and quite a few other meme coins, there's PEPE, we'll cover that here, and PENGU as well. These are all fantastic coins to consider investing in, which is why we're going to cover them. Okay. Now, I think right now at this exact moment, probably not the best call, but we're going to identify key level supports and resistances, kind of go from there. So let's start off with our very first WIF hat. This is pretty much my favorite, my flagship. I'm averaging pretty heavy in the 50-cent range for my spot bag. And I forget if what's 100, 200,000 for the amount that I purchased. It wasn't like a phenomenal amount, but it was a larger chunk that I'd like to invest in meme coins because I'm more of a top 10 kind of investor, right? However, when we take a look here at WIF hat, we can recognize we're kind of in a range. We got the 90 to 80 cent range below, heavy concentration liquidation, and 115 to 130 above. The likelihood of going up higher from here is greater based on the simple fact that there's more liquidation closer. We're maintaining above that $1 range, doing very well. So my speculation is that $1 will hold. But once more, when we take a look here at liquidation delta, it's still in the green. Okay, so as of right now, we're still looking positive. This could change very quickly, but the important thing to recognize, I would say, is the open interest areas here. This gives us perspective on where people are hedged the most or the most amount of positions available. And we can see $101.05, and then secondary to that, this is probably more important here, 99 cents to 101. So that's kind of the secondary area of support, which is kind of where we're at right now, okay? Obviously, once we refresh, we can see that. Why don't we refresh these other ones here too? Liquidation long delta hasn't changed too much, and it's kind of where we're at. So overall, I think the $1 range should hold. And let's talk about that and why I feel that way. First of all, $1 is that area of support based on confluence with multiple moving averages, but also that 0.65, 0.618 fib level right there at that low 92 cent range. Okay, so between 98 and 92 cents, that's where I feel we get the most amount of support. So just bear in mind, there's a decent chance we come back to that area. That's a solid pivot point. I've had my eyes or my target set on that low 90 cent range. So that's more secondary to $1. Now, when it comes to $1, it's just that psychological round number. So when you understand like key levels, Bitcoin is the same way at 100,000, for example, 110, 120. These round numbers provide a lot of support and resistance. So $1 should hold. Heaven forbid it doesn't. 92 to 98 cents is that secondary range of support. That's where I'm going to consider dollar cost averaging in to a potential long play with leverage, low leverage, of course. All that said, we're still diverging here. Stochastic divergence for the third attempt here. Bitcoin does have a very similar structure right now. And overall, we are looking like a short-term correction makes sense. But once more, there's nothing like super amazing here saying, hey, we're just going to drop like a rock. I think the likelihood of a significant correction is pretty low, but that's just my thoughts. I hope I'm wrong and we get some nice entries here. But suffice to say here, we are also printing somewhat of a rising wedge here. And this, once more, you don't want to trade patterns alone, but generally speaking, when you see something along these lines here, breaking below, that could imply further downside. So it would make sense for us to see the 90 cents to $1 range. And if so, a good DCA target once more is at 92 to 93 cents. Okay, so that is how DOGWIF hat looks right now. Taking a look at Dogecoin. This is a coin we just took some nice profits on here with our Premium Plus. We took a nice long position, 25% in 2 hours yesterday, and we scored on an older BNB trade as well. Not taking a tremendous amount of trades. I'm trying to keep it minimal, even though we're going to be increasing the amount of trades that we take based on how well the market's doing. We're not getting like super ridiculous with our trading. And I just recommend, I say that because I want to recommend that you maybe consider the same thing. It's easy to do when things are looking really good, but I can tell you they can look really bad fast if you're not careful, because Bitcoin is kind of a funny place. All that said, let's take a look here next at Dogecoin, kind of see what's going on. So liquidation standpoint, we don't see a ton above and below. It's kind of sparse, but we do have this 20.5 and this 22 cent range above and below. Okay, so we're right smack dab in the middle of that. Nothing super crazy. But the key takeaway here is that liquidation long delta is just above break even, which implies we have some bullish continuation potential, and there's more bulls in the market than there are bears, but the key takeaway is that could change soon. So I want you to understand here the key levels here for us based on open interest for Dogecoin. And this is an extremely important thing. This is where we actually took our long position. We actually got in at 20.8 and we took profit at 22 cents. It was like a 6x leverage trade. But what I'm getting at here is there's a lot of confluence there. 20.5 down as low as 20 cents. So that's a really good area to consolidate or to potentially add to your position and average in, if you will, on the way down. Okay. Now, when it comes to the chart, this is the daily time frame. We have a bull flag breakout. This liquidation range has been fully swept. We just looked at that, and we got a lot of confluence here too, based on resistance. So it's going to take some effort to get past that 22 cent range, right? But a few candle wicks up, there's a good chance we push through that, pending Bitcoin doesn't run to the downside. If Bitcoin does run, we may actually see a bearish backtest of this descending trend. Sorry, that'd be a bullish backtest. And a lot of times you'll see the price action bounce off this level. So we do have a 0.5 fib at 20 cents even. I'm thinking 20 to 20.5 is a solid consideration for a long on Dogecoin if we see the price pull back concurrent with Bitcoin. Once more, if we can come down to that 115 to 114K range for Bitcoin, then we're going to be in good position to see a lot of altcoins stabilize at their previous highs, working as new lows. That's generally what I'm looking for. We don't always get what we want though, right? This market gives and takes quickly. Speaking of which, BONK does look like it's pulling back. Let's go ahead and take a look at this guy here next. And just start off with the back-end data here and just understand there's tremendous amount of liquidation on the downside here. So this basically implies that we're in a position right now where the price action is not looking awesome to the upside. In other words, what goes up must come down. We're in a position where these are solid areas of consideration for entry. And what I mean by that is we got this 3 cent range, 2.5 and 2 cents even. These are three areas of consideration for either a long or dollar cost averaging into. These could also be short profit targets as well if you're considering a short. But once more, liquidation long delta is still pretty high. So it's generally unfavorable to consider a short in this coin. It's still super strong. You're better off waiting for a long position that either may or may not happen, right? So that's kind of what we're looking for there. And we look here at open interest, we can recognize too that there's some support at, I should just zoom in a little bit, 3.4, 3 even, and 2.8. So those are the three areas of consideration for averaging into your position. So once more, it's never an exact science, but that kind of helps us understand where we're at there. Let's go ahead and update our fib levels. I'll go ahead and post these playout charts on our Twitter, Telegram, and Discord so you know where they're at. That's always available for you. It looks a little something like this, right? I also provide a lot of shorts as well. Those are available on TikTok if you're curious. And then obviously make sure you jump on over to BitUnix too, folks, while we're on the subject. No KYC or VPN required. We got awesome reward bonuses. Right now we're sharing a $10,000 prize pool amongst our top 10 traders. And it's a pretty cool little situation. Every month, if you use my link to register, you'll be eligible for future promotions and giveaways. So let's take a look here at the ascending trend. That is looking quite solid here in the overall sense. We're running concurrent above the 20-day SMA. It's going to be a while before we test the SMAs, but on the daily time frame, we kind of zoom out here. We want to recognize that we're not quite to our all-time high, at least our all-time high closure, if I'm not mistaken. Is that that's the all-time high here at about 5.5. Okay, or 5,500, depending on the chart that you're on. So the overall sense here is that we got a long ways to go, but we're also in a position right now where a short-term correction to this fair value gap makes a tremendous amount of sense. I think right around 3,000 or the 30, whatever chart again you're using, would be a good consideration for a long, just based on that being a previous high support range, the lower area of that fair value gap. But overall, there's not a ton of hidden divergences or anything of that sort, it's pretty obvious that we're still over 70 in the RSI. You generally don't want to take a short into that. That's a high risk consideration. Furthermore, stochastic is swinging down this for the second time. That does carry more weight than the first, usually an early indication of reversal. But once more, it really depends on how strong Bitcoin corrects, or if it stops and holds. The key takeaway here is that we want to pay attention to volume. If this volume continues to remain high, then it's really all good. There's no real consideration to close a long position. It's just that this is massively overextended. If we look at this here, we hit an overextended state when we hit 3,400, and we went all the way up to 4,000. So we're overextended, leading into an additional 20% pump. That's just a lot. That's way too much. So once more, the pullback here makes perfect sense. I'm speculating we're going to see 3,000 right there in that range as that lower fair value gap gets filled. Okay, so that's kind of where we're at there for BONK. Let's move on to PEPE and kind of see what's going on here. Let me see if I have that pulled up here. Actually, let's do PENGU first, and then we'll switch over to PEPE to round it out. So starting here with PENGU, we can see this is we're in a 0.618 golden pocket fib level based on the macro type of fib levels here. Okay, now I want to emphasize something because some folks seem to be so obsessed with Elliott wave and fib levels that they fail to recognize that confluence is everything. Okay, so just because we have 0.618 fib level here, coincidentally the price is reversing itself in that range, doesn't mean it's exactly happening that way, right? It's kind of one of those manifest destiny kind of situations. What I'm getting at is once we start to have more confluence and confirming factors here, then we can speculate that that's a good solid resistance. For right now, it's just capitulation, natural turnaround here, which is common when you hit those ranges. But I just want to kind of emphasize that because some folks do get kind of they get pretty ridiculous with the Elliott wave theory, and it just kind of it's crazy to me how that works out because fib levels, they're just natural numbers in trading. They're not what you should base your trades on. It's just kind of one of those placebo effects because you're always going to have the right answer when you have 15 different potential scenarios, right? Anyways, I mentioned that just to urge some caution because some folks put way too much emphasis on that. The thing we want to look at here would be either a divergence, which we're looking at on the daily, still not quite pulling back underneath 70 in the RSI. So usually not a good consideration to try to short into it, all right? Because we're still in that profitable uptrend. Now, should you take profit? Yeah, because it's overextended. We're looking at a significant correction if it were to pull back, especially if Bitcoin comes down to that 115K range. But between now and then, it's safe to presume the tentative resistance for us is this 3.2 range here to 3.0 even. Okay, that's kind of the tentative resistance. Now, when it comes to liquidation, this is where things get kind of interesting because we look at liquidation, we got this 3.6 range. It has a lot of volume there, and the same thing as well below, right at about 2.9 to 2.6. So both those ranges are heavily targeted, if you will, for market makers because there's tons of opposition there and they can just move the price action fast. In other words, the whales who've been pumping this coin, because trust me, it's not people like you and I, they see this liquidation here at 26 to 28 cents. It's a distinct probability they're going to push the price action a little bit lower to sweep that level, and then people flip short, people like you and I, and then they turn around and go long, right? They just, it's a really ridiculous thing, but they're going to sell until nobody wants to sell anymore, and then they're going to just turn around and buy. So what I'm getting at here is we're closer to that range. It makes more sense for the price to pull back a little bit further. Liquidation long delta is slightly high. This isn't a tremendous amount though, so not really a great sign telling us we're just going to go up. And if we take a look here at the open interest, we can recognize here that there's a resistance above us at 3.1 and 2.9 just below for support. Okay. Once more, support is often consistent with liquidation levels because liquidation accumulates at support ranges. All right. So all that being said, there's not like a significant amount of divergence here, but we're seeing early signs letting us know that a shift in momentum is possible and the distinct probability that we're going to go down. In fact, we see this rising wedge pattern on a few other charts. It's an ascending broadening wedge pattern, and these are generally bearish because you can see that we're establishing higher highs, but also higher lows. And the way that the pattern shapes out, it starts to squeeze and compress and inevitably breaks its bottom. So if we come back down here, you're looking for a bearish backtest of that ascending trend right off this 0.618 fib level, once more confluence, and we see the price go down lower. That's essentially what we're looking at there. So this actually does appear to be a decent consideration for a short, even though it's considerably higher risk. So I would recommend your leverage stays low if you're going to try this one. Let's move on to PEPE and call it a day. I know this is a long-winded analysis here. Sorry about that, but I like to be thorough and get everything done. as well as not tell you what you want to hear. So if you do appreciate that, why don't you hit the like button, comment below. Love to hear your thoughts. I do get a lot of positive feedback, just keeping it real. It's not something that I say. Most people say that, and I appreciate it just because I'm never going to tell you what you want to hear. I'm not a moon boy. I don't get paid to promote any of this crap. It's all crap, honestly. That's why we trade it, right? That's kind of the funny thing. Anyways, the whole point of this is that PEPE had a cup and handle pattern here recently. In fact, it looks like it pretty much just overextended itself for a couple more days out. And we've since broken through that 0.618 fib level, but also pulled back, likely to sweep some liquidation. So let's go ahead and pull up this, and we'll call it a day for you. So PEPE, we're going to go ahead and look at liquidation. There is a significant chunk at 1.4, upwards of 1.5. So it's kind of just that range above the price action. So there's a decent chance we could see that continuation, but in all reality, you never want to trade specifically for those levels. You want to trade in conjunction with the trend. And the trend right now is up based on open interest and liquidation. So with liquidation long delta being high and liquidation to the upside, that's more incentive for PEPE to go higher. So maybe a better consideration to consider along with this coin, all depending on how Bitcoin performs. If Bitcoin pulls back by a small margin, we see this coin doing well, then it would be a different story altogether. But if we look at open interest, 1.3 to 1.25 is those two areas of support. So let's see what that looks like on the chart. So 1.3, that's above the price, it's right here. And 1.5 is right here. So that's right there at that 0.5 fib level and or the most recent local bottom. So hypothetically, the best consideration for entry would be right here at this area about 12.4, 12.5. So I'm going to go ahead and put in a little bit of an alert here at 12.5 just to go ahead and see if that gets triggered and where we're at with Bitcoin. Is it worth considering along at that point? We have a lot of confluence there and support in the current range. So that's good. The point of control is in that range. So hypothetically, decent consideration for long. When we look at everything else, of course, most coins are consistent with this descending type of trend and the stochastic divergence. That's kind of an early indication. Once more, we may see further downside. So it's difficult to warrant a long position right now as the prices pull back. But I can tell you, lately, every time the prices pull back, they just bounce right back up as soon as Bitcoin finds its bottom. And Bitcoin actually is stabilizing quite nicely in this 18.8 to 19K range. So I would not be surprised if we pivot and hold here. The last thing I wanted to just double check here, and this is a good little round out, is Bitcoin dominance. Bitcoin dominance has been recovering over the last 12 hours. So that does imply that altcoins are kind of stabilizing. On the macro here for Bitcoin dominance, we have a golden, sorry, this is not a golden, it's a three black crows, essentially three strong red candles, usually followed by a fourth green candle, right? That's kind of how the context is. It is a continuation pattern. It should continue lower eventually, but initially we should start seeing a short-term reversal, which implies maybe a red weekend here for altcoins. Just a thought. All that being said, be cautious and careful in how you trade. I hope you found benefit here. Once more, all my playout charts will be available on Twitter, Telegram, and Discord. They look a little something like this. And I hope you have a great rest of your day. Thanks again for being an amazing part of my life. We'll see you in the next one. Be safe out there. Take care.